Welcome to another episode of the Savings Guru podcast. I'm delighted to be joined today by Julia McColl, who's the Commercial Director at Chetwood Financial. Welcome, Julia.
Hi, James. Lovely to be here.
Perhaps you can start by introducing yourself to our listeners and tell us a little bit about your background and how you've come to be involved with Chetwood.
Yeah, sure. So I guess my background is all in financial services. So I actually started off at Lloyds Banking Group. I joined on their grad scheme, spent sort of 10 years or so actually working in various financial products. So across credit cards, loans, mortgages. I often used to joke that I tended to be more on the credit side actually than savings. And then I guess kind of looked for something different and ended up moving into Capco, which is a small management consultancy. And that's really where I got into the kind of wealth management and private banking space. So they do a lot of work with clients in that space. And really my role was focused around helping them to work through their commercial roadmaps, look at customer propositions. So really helping them focus on, I guess, their offering out to the market. And that's where I met one of the founders of Chetwood and actually really got me hooked on the business model, which is, pretty different, I guess, to a lot of the kind of other sort of neobanks or challenger banks out there. And it was just something that really appealed in terms of having a very kind of clear customer purpose too. So yeah, I was kind of hooked on what they were trying to do, I guess, and yeah, joined right from the start. So was there right at the beginning of kind of setting up our kind of lending offering, but also getting our banking license, and then obviously launching Smart Save on the back of that.
I think our listeners are sort of reasonably familiar with Capco, as we tend to be up against each other at the Consultancy of the Year Awards at the British Bank Awards. So every year it tends to be us and 11FS that are always on the finalist list. So
Yeah.
you've had a good background. I know that you were kind of there right from the start. I know from our conversations that you did a huge amount of research, and clearly that's something that would come with your kind of background as well with Capco. Can you tell us a little bit more about why kind of Chetwood decided to become a bank, and I guess, but obviously particularly what came out of that research process in regard to the savings market and what savers would need?
Yeah, definitely. So we always intended to be a bank. That was kind of part of the business model from the outset. And really, we're focused about finding distinct customer segments, particularly those that we think are underserved by the market, and then looking to create innovative products to meet their needs. And we knew that, for us, in order to be able to kind of have the breadth and the kind of reach that we wanted, that we would need a banking license to be able to offer a number of different product categories to customers. So that was something we were clear about. I think the research then, actually, for me, what really stood out was that it was actually really compelling for customers that we were a bank, and that was important for customers to understand that we had a UK banking license, that we were based in the UK, that our customer contact team were in the UK. All of those messages resonated much more strongly than I was expecting as we went into the research. And so this kind of proposition, the kind of the messaging around those elements really kind of came through because of the focus that customers had given in the research. And you're right, for us, research underpins everything that we do. So, it's everything from the product features, the customer journey flow, the brand look and feel, and then, the proposition messaging. So we really did test every element of that and then iterate and make some fairly fundamental changes actually to some of the kind of early thoughts around product and journey on the back of what we learned. So yeah, that's kind of for us really core, I guess, to the process of creating any product, and certainly was very true for Smart Save as well.
One of the things you've done, you mentioned about being different, that's very different is your dual branding with the use of the Chetwood name and the Smart Save Bank branding. Was that something that came out in the research? Was there a rationale that drove that decision from the work you did?
Yeah, so our kind of going in position, I guess, was that we wanted a corporate brand name, Chetwood, that would really kind of encompass all of our product offerings. And because of our business model, we knew from the outset that wouldn't necessarily just be one brand. But we didn't know how many we would want or need. We still don't. We don't say that we'll have a different brand name for every single product. It's really down to the target market. And so if you think about LiveLend to SmartSave, LiveLend's our first lending product, and SmartSave, obviously, our savings offering, very, very different target market. The customer demographic really couldn't be more different. And so we felt that kind of grouping customers with different needs under one brand name wouldn't really fit with what we were trying to do. Now, that's not to say we didn't test the Chetwood name with SmartSave customers. We did. In the early stages of creating the SmartSave brand, we went out to market, we tested 30 or so different names that ourselves, a bunch of people across the organisation had come up with. And Chetwood was part of that. So we tested Chetwood Financial, we tested Chetwood Bank. And actually what we consistently found was that SmartSave came up in the top 5 names for all our customers, and Chetwood was often in the bottom 5. So it kind of made it a really easy decision from that perspective. But yeah, we very much start with that kind of first principles of let's get the target market right, let's test the proposition with them alongside names, and really that drives the kind of the brand strategy based on what customers in those segments find appealing and resonates with them.
You're obviously now coming up to the second anniversary since you launched into the savings market. How has it gone for you? Has it gone as expected?
Yeah, I mean, obviously super proud of what we've achieved. I think, we've brought in hundreds of millions of deposits, thousands of customers, a Trustpilot feedback score of excellent. And for me, one of the things that's important, I guess, to reflect on is it isn't just the product and the customer journey that gets great feedback from customers, but it's also the customer service that the team offer. And that's important because, a lot of the other elements we have tested, we have iterated and improved with customers, but that customer service offering is just as important to the overall experience for customers. And so it's great to see that also is coming out with really strong feedback from our kind of actual customers. I think there's always so much kind of nervousness and uncertainty when you launch a completely new brand, a completely new product. Despite all of the research, you still don't really know how customers will respond until you put it out there. And so, I think the fundamental kind of differences in our proposition actually were things that, when you're right up against that, just about to go live, they were the things that worried us, that, the niggles that you have that say, will people understand, the fact that at the end of their term, we're going to send their money back to them if they haven't made a decision. The kind of rationale for that very much came out of the research and was very much about not allowing customers to have their money sat on kind of really low interest, and to really help them kind of almost spur them into action. But just before you go live, of course, you start to think, is this going to work? Are people going to like this? It is something very different in the market. And so it's a risk. And there were a bunch of things like that when we went live that we were kind of looking out for, I guess, to see how they landed. But actually, all of them landed where we wanted them to, where we hoped that they would from the research that we'd done. And there were no kind of big fundamental changes that we needed to make after go live. There's always constant iteration and improvement, of course, but nothing fundamental in terms of the kind of end-to-end design, which was great. I think our launch story was quite comical looking back, I guess. We sort of had this really nice, slow, phased rollout planned. We were working with Savings Champion to give some of their customers kind of early access and to make sure that we sort of launched a bit of a beta rollout. And about 36 hours into this, Money Saving Expert got hold of it and wanted to list it. And as you can imagine, like the volumes just went crazy, customer contact team were kind of, all hands on deck. And it just entirely wasn't the launch that we'd planned. But actually, in a way, was really positive because, everything did work as expected. We got a bunch of feedback in from customers really early on. So, it's not to say everything worked kind of seamlessly or perfectly, I guess. But I think overall, the important things did hold true. And the feedback that we're getting from customers is, I guess, testament to that.
One of my favourite quotes, which actually I picked up from an FCA regulator, is "a plan is great until you get punched in the face," which is a Mike Tyson quote. And I think you're right. However, I really liked it. I think it was particularly funny because it was a regulator that came out with it in a presentation. No, it wasn't expected. It does sum up how these things, however well you planned, you've made it, and however much research you've done, however much you're testing, there's no substitute for actually that live experience, and you've got no control over what happens there. The best laid plans can come unstuck, something that's been missed or something completely unexpected from customers.
Yeah, for sure.
So however many times you do it, it's always a nervous entry into the market for the first
Definitely.
time.
Yeah, definitely. And I think, because, my reflection, I guess, from a kind of career perspective is it's so different when you're doing it under a completely new brand and it's a completely new product. And actually, I've launched other products in the other places that I've worked, but very often they're an extension of something that's already being offered. You're doing it under a Lloyds Banking Group brand, or, it's just different, I think, when you're doing it from a completely sort of startup position. And you don't have all of that kind of, customer recognition and trust. And so, it all feels a lot more kind of uncertain. And we've done it a few times now, right? We've launched a number of different products, and I always feel the same. Just before the moment of go live, it's that like, are we really confident everything's going to go? And, as you say, it doesn't, right? You have to be able to react. And I guess one of the things that we've made sure is true from kind of how we've built the architecture around, the IT and our flexibility is that we know that we can respond. So, if we find something really isn't working in the journey or, even one of the product features, we know that we can react to that quickly. So I guess that's kind of always a kind of, something that you have to sort of keep in mind. And as you say, there's just no better way to learn really than getting out to market and trying it.
No, absolutely. And customers always surprise as well.
Yeah, for sure.
You mentioned the kind of banking journey earlier on. Obviously, it's something that we've been involved in extensively as well. I mean, we've had I think we're up to 32 new authorizations and about 50 odd in total that have come into the savings market. Obviously, because some have changed license, bought incumbent banks, etc. I think Cash Plus is the only one that's got across the line so far this year, but it's obviously had a tremendous impact in the market over the last sort of decade or so. What impact has it had on what you're doing with Chetwood and SmartSave?
I think it's really great. I mean, clearly it's good for customers. I think having more choice in the market can only be a positive. I think particularly kind of, anything that's encouraging customers either to save more or really to make the most of their savings is just good all round. So for us, it's not something that we kind of focus on or worry about really in terms of, competitors coming into this space. I think, when we talk to savings customers, obviously they are becoming more relaxed about trying newer brands. The FSCS promise obviously really helps with that. And I think it's, for me, the more people that come into this space, hopefully the more we get customers kind of moving into a space of, really being able to search around the market for the best rates, the best products, and the products that work for them, that perhaps stand for things they want to to kind of use their savings for. You know, I listened to the podcast you did with Tim from Oxbury Bank, and I think, you know, that's such an interesting proposition. I also really like what Nude are doing with their kind of savings account for mortgages. You know, there's lots out there that's becoming more targeted almost, and you know, that's clearly a part of our strategy to be able to offer kind of niche offerings to distinct segments. But it's great actually to see that there's a whole bunch of new entrants coming in who are also trying to operate in those areas. And I think that's great for customers. I think it really does help kind of move the whole market forward. So yeah, it's not something that we look at competitors for inspiration, I guess. And we often, when we're doing research, test competitor ideas too, to understand, you know, what's resonating with customers, what they like and don't like. But really, I think it has to be a positive for the industry as a whole.
Yeah, I think you're spot on there. I think it's that certainly new banks have been the savers' friends over the past 10, 11 years, and without them, rates would have looked a lot worse than they currently are. For sure. It's interesting. I think you're right. Kind of talking about going niche. I think we've seen that people focusing on niches has been kind of the way it started to head, and that probably the other one is seeing a more evidence of a kind of regional, geographical focused people now. So there's a bit of a pivot there with some of the new entrants coming through, looking at serving a particular geographical area, which will be another interesting dynamic to see how that works.
We did hear about that from customers in some of our research. You know, I think particularly that kind of moving away from the London focus, and you know, even the fact that we're based up in Wrexham. You know, people actually are really positive about it kind of being a slightly different model. And, you know, I think, as you say, there's kind of good extensions of that, I suppose, in some of the more geographical, regional propositions that are coming out, which is really interesting and is almost it's almost like we're going back in time in one respect, isn't it? But I think customers really like it. And actually, if you've got your IT set up in the right way, then you really can operate in these niches. You know, it's kind of core to our business model, but it's absolutely about being able to kind of, you know, I call it proper marketing. It's like actually find out what a segment wants and deliver something specific to their needs, not try and create a, you know, mass market proposition that works for everybody, because the IT cost to implement it was so great that it then has to kind of really, you know, cover such a large group of customers in order to deliver that return on investment. You know, it's a very different way of operating, but clearly the technology is enabling businesses to set up and to succeed in these niches. And I think that's really exciting for customers and for the industry.
Yeah, I agree. I think it's going to be a fascinating market to be in still for a long while yet. Well, as we're looking forward, what are your plans for the future? Have you got anything lined up that's going to bring something new to the savings market, or innovation for savers?
Yeah, so one of our core initiatives this year, and I guess it's kind of less consumer focused in one respect, but hopefully not in another. So we're really focused around banking as a service. We set up Chetwood actually right from the outset to offer banking as a service to other companies. So that people can use, you know, our products, our technology stack, our customer service if they want to. And I think it is a really exciting extension of what we've just been talking to, which is, you know, there are so many companies out there who have memberships, you know, membership groups, customer groups within their own organizations that they would like to be able to offer savings accounts to. Equally, there are a bunch of new fintechs out there who might need deposits in order to support the rest of their business, but who aren't necessarily focused around building savings accounts, you know, as part of their kind of core proposition. And so what we're able to offer is actually a way for organizations to effectively pick and choose which bits of the kind of end-to-end offering they want to use from us, and use that really to leverage then and offer a savings account to their own members or customers. So that's something that we're very focused on this year. I think we've got from a technology perspective, there's some really cool functionality around pricing and product development that allows us to change prices quickly, to stand up new products. And I think, again, offering that out to the market just enables everyone in the industry to kind of react quicker and offer essentially better products and prices for customers, which is clearly a good thing. And then I guess the other thing we're working on at Chetwood is quite a lot around additional credit products. And as we start to launch those over the next 12 months or so, we'll obviously be looking to bring in larger deposit balances to support that. So that will see us over the next certainly over the next 6 to 12 months, be in market a lot more consistently. So, hoping to be there, offering kind of best in market rates. It will also see us look at extending the products that we offer in savings. So thinking about allowing customers to have multiple accounts, or perhaps to exceed the kind of 85k FSCS limit. Both of those things really just helped us kind of focus on a very simplified launch. But really, as we start to expand our offer, I expect those things will move and change over the next 6 to 12 months. And with that comes a whole host of ideas around how do we use open banking to improve the journey flow for customers who can't easily verify existing bank accounts. What other different types of savings accounts would we want to offer? I think certainly over the next 12 months there'll be a lot more focus on kind of reaching out to, I guess, a broader base of customers.
That will be music to listeners' ears, that we might see more best buy rates and they're back in the market more often for sure in the current environment.
And I think for us as well, the customer contact team, they'd much prefer us to be on all the time. I think we're kind of at the moment, as you will have seen, we have been in and out of the market, which clearly has made sense. And one of the things we kind of set as one of our early principles was to make sure that we always give our existing customers the best rate. So our customers who are reaching the end of their fixed term, we always want to offer them a better rate than our kind of new to customer rate. And so, that's something that has meant that we've been out of the market for new customers more, because actually what we're doing is retaining quite a lot of those balances from our existing book. I think, as you say, it will mean that we become a kind of a more consistent option for customers, which hopefully is a good thing for the market too, because as you say, that drives that competitiveness and kind of gets rates in the right place for customers overall.
Yeah, absolutely. It's something that I've commented a lot on. It's competition that's really been driving rates over the last few years. People sort of talk about changes in base rate and other influences on the market, but actually it's really been the competitive landscape and what individual providers need, and whether that coincides with others at the same time that's had the biggest influence on rates. Sure.
Definitely. And we see that all the time, right? Even when we're kind of bringing in deposits from new customers, it's, as you say, that kind of, depending what period you're in, we can be doing 3 or 4 rate changes a day sometimes, because the market can literally be moving that quickly. And that can be people coming in, that can be people going out of market, people changing price to get to the first place again. It's such a dynamic space that really, you really kind of need to be able to react to that quickly. But I 100% agree. It's the competitive landscape that's driving the rate kind of wars, but in a good way for customers.
Yeah, definitely. I mean, we've talked a lot about how things have changed over the kind of past decade and all the new entrants. Going forward, what do you think the savings market is going to look like in the next few years? What's your kind of crystal ball view of the world, if you like?
I think, it's interesting this year, isn't it? It's been over the last 12 months or so, such a kind of completely different time for us to kind of look at both the lending and savings market, actually, to be honest. And I think I think clearly we've seen a group of customers who, have been struggling on the back of COVID. There's a group that have also been able to save more on the back of COVID. And I think what will really be interesting, in the kind of immediate term is how do people now respond? So, are people going to, as has been kind of talked about, book the holidays, spend the money, kind of really, kind of get back out there and enjoy it? Or is there a group that are still actually going to be, kind of a little bit more perhaps fixated on making sure that they have that buffer, using that deposit or that sort of savings balance that they've managed to build to kind of better effect, and I guess use it to almost establish a habit and a kind of, a kind of a way of living. So I think that would be interesting to see. Clearly beyond that, I think, we should continue to see new entrants. I think we will continue to see more kind of specialist savings companies, as we've talked about. I think banking as a service is starting to kind of be a broader offering. And so I think that will be interesting to see how over the next couple of years that shapes and which organizations really start to use that, and how they use it, how they take that through into propositions for their customer bases. So yeah, I think that's an area to kind of keep an eye on. I think, we've seen kind of, I guess, sort of over the last couple of years, 3 years or so, kind of more of the kind of savings platforms, so Raisin and, and a bunch of other people in that space. And it'll be interesting to see if that continues to build. I feel like it's been, it's certainly been kind of one of the bigger changes over the last few years. So interesting to see where some of those go as well. And then I think there's kind of a bunch of, I guess, slightly more retail focused propositions around, sweeping savings into pots and kind of helping people do that kind of almost day-to-day saving. And there's been some great innovation in that space, but I think hopefully as open banking becomes a little more embedded and, hopefully as customers become a little less scared of it, there might be more in that space actually. And I guess that tends to be a younger demographic probably than our customer base for SmartSave at the moment, because, it tends to be people that aren't yet ready to kind of fix money away for long periods of time. But hopefully that can start to kind of really embed those habits and that good behaviour, I guess, from an early age. And I think, there's a number of people out there trying to do stuff in that space, whether it's Plum or Bud, there's a number of different companies that are interesting, and certainly again one that I'll be keen to see where they go to. And then I guess crypto, I'm by no means a crypto expert, but I think there is a piece about currencies and I guess again a little like open banking, as they become more kind of commonplace, more stable, it'll be really interesting to see whether that impacts the way that people save as well, and perhaps in a much more fundamental way than we can kind of even really imagine at this stage.
Yeah, I mean that's quite a list there of things, but I think they're all very relevant, and that, all things that are going to have a huge influence on the market. There's probably a few bits there I'd be interested in your kind of views on that. You mentioned the sort of savings marketplaces, which on paper kind of seem, like a good thing for savers potentially. They haven't really caught on yet, probably quite, I suspect, as people would have hoped. Certainly within that industry, you probably account for in total less than 10 billion of balances in a 1.7 trillion savings market.
Yeah.
Why do you think that's the case? Is it early days yet, or are there some issues that are sort of halting that growth in that area?
Yeah, I mean, I think a lot of savings for me just, it comes back to that kind of customer inertia. And I guess, really kind of when we do the research, a lot of what we hear is just that, it's the thing people know that they should do, but you don't necessarily get around to straight away. And And I wonder whether there's a bit of that actually. You know, it's different. It requires a little bit more brain power to think about whether you want to do it or not. I wonder if that is kind of not holding people back, but I guess, slowing down the adoption and the kind of take up rate essentially. It's always, I often say this because I think, particularly when you talk to people that work in financial services, people can get a little lost in kind of, we know too much, right? Like you have to kind of take it back to the customer to try and remember. But even then, actually, a lot of what we do day to day, isn't necessarily what we know we should be doing with our money, because life gets in the way, and people don't necessarily make the right financial decisions at every stage. And so, I wonder if they're just being hit by, as you say, kind of that, the slow take up is really just is part of that, and part of people not spending the time researching and, thinking about their options in the way that they might like to think they would, but generally don't actually end up doing. But it will be interesting to see, I think, where they go to. There's a lot of people in that space now. And it's actually something I haven't tested with customers, but I would be really interested actually to do a little bit of research and to understand, as you say, kind of what it is that's, that's creating that kind of, those people that are using it and how are they finding it, but also for those that aren't, kind of what's driving that. Yeah,
I think it's particularly interesting, obviously, until recently, Hargreaves Lansdown and kind of Raisin being the sort of big names, albeit Raisin not so much in this country, more from Germany, but we've now had Aviva go into that space as well. I'm pretty sure there's a fairly significant other player that's going to come to the market this year as well. That's a sort of UK household name. So it's an area I think we're going to see more from, and I'll be interested to see how that pans out.
Yeah, me too. And one of the things we get very focused about is this kind of end of term, inertia of customers who hit the end of their term and sort of don't do anything with their money for 3 months, 6 months, as they sort of think, I must go and check the market, I must look at another account, I must make the most of my money, and then actually, end up kind of in this period of sort of delay. And it'll be interesting to see how these platforms, how they can help that, I guess, and how they can potentially be sort of really prompting customers and moving money automatically, and actually just kind of, sort of removing that whole barrier that we see. We see it across the high street banks, people kind of leaving money in pots and not getting around to doing anything else with it. We see at the end of lots of fixed term accounts as well. So I think it's really interesting to see how those offerings evolve.
You talked about some of the app kind of services like Plum and Chip that sort of help behaviourally. I think one of the things that's always been sort of said in the past is when you get good innovation like that, often that gets absorbed into the bigger banks because they either replicate the service or they go and buy them and take them in house. I think what would be interesting is that if it went the other way, and if we perhaps saw some of those combined with the marketplaces instead, that would be something
exactly.
that would be really interesting and try and solve both kind of elements of the challenge there.
Yeah, no, I totally agree, and I think there's an interesting gap, but there's you've got at one end you've got a lot of kind of perhaps more innovative companies popping up, like we talked about, like Plum and Chip and others. Their target markets feel quite different actually to a Raisin or a Hargreaves Lansdown, and I guess there's just an interesting transition there about, as you say, if you put them together. There are benefits for both groups of segments, I think, across those offerings. So there's just something there, isn't there, about how do they both evolve almost and consider the target market to come up with something that's actually really impactful and potentially really low effort from a customer perspective, which is something that we're always, on our side really, really focused on, because I think that's how you actually get change, and you kind of have to make it as easy as possible for customers to really kind of engage with. So it's definitely interesting when you look at the market, and I think there's lots of room for some kind of fairly fundamental shifts that could just really simply, actually, because the technology is already there, but really kind of bring to life a number of different offerings.
Yeah, like you said, the technology is there. It'd be interesting whether it kind of gets combined to join it all up. Which obviously open banking will facilitate. So it will be interesting to see whether that gets embraced and adopted.
Exactly. And I heard lots of stories through COVID of, particularly actually in the SME market, people kind of really starting to, at a customer level, use and trust open banking because, effectively, I guess, because they weren't able to get offers without it. And it'll be interesting to see, won't it, from a retail perspective. I still don't see that that's happened. But how do we make that happen? And is savings actually the area that really, that will really facilitate it? Because there almost needs to be some stronger use cases for customers to really understand how it can benefit them. And I feel like there's some really good examples in some of these new fintechs. So maybe they do have an opportunity to actually start to educate people and really get that engagement where, it just hasn't been there over the last few years. But maybe they can create a reason to kind of really embed it, which would be great.
Yeah, I think we will. I think COVID will definitely have helped accelerate that. For sure, and it will certainly helped accelerate some of the adoption on the other side, and people getting more comfortable with it. I think the other thing you mentioned that that I think is really interesting to see what happens. It was another COVID thing, which is this what's been kind of termed as accidental savers. And you're absolutely right what you described there. With COVID's been very polarizing, with some people really, really struggling and in really difficult position. But on the other side, some people have come out of it financially incredibly well, have found themselves with a lot more in terms of savings. I think there's certainly a bit about some people will use some of that to have a bit of a splurge when they can. I think there'll definitely be some that will hang on to an emergency stash, maybe some that do a bit of a splurge and hang on to a bit of the extra that they've had. But you talked that the word used was habit there, and that's a bit I'm really interested in, to see whether actually it will have an impact on people's habits, and whether we'll see people change behaviourally, where people will say, actually, no, I'm going to commit to now being a regular saver, and now I've got into the habit of having that extra money. I'm going to commit, even if not all of it, more regularly going forward, and change how they save for the future.
Yeah, and I think even just kind of anecdotally talking to people as opposed to actual customer research in this space, I think a lot of people have been quite surprised by how much they've been able to save. And so I think that's what kind of drives some of that. It's been relatively easy for people to save relatively large amounts of money. And so that does kind of, it is positively reinforcing that behavior, isn't it? And I think that's what drives habit, right? That's what creates those kind of sort of go-to reactions. And it will be interesting, because clearly there's a bunch of people that, as you say, will splurge and will, have been looking forward to splurging. But I hope there is also a group that have just fundamentally realized that actually with a few changes, they can actually start to save a relatively material amount of money, and that kind of then drives and reinforces that behavior over time. Because I think that would be a great outcome for kind of what has been a very difficult year. And I also think for that group of people that have really struggled, it would be great if this also does drive them to try and think about small habits to put away. I totally appreciate, and we serve the near prime market in our lending products, and there are groups of customers in there who just can't save. They don't have the disposable income to do that. And so it's not just about good habits for everybody. There are clearly people in different situations. But I hope for those that can, it sort of re-emphasizes, I guess, the value of it. And hopefully starts to drive some kind of different behaviours in that space too.
Yeah, it will be fascinating to see how it plays out, and there's no kind of precedent for it either. So it's impossible to kind of predict as well where it's going to go.
Yeah, definitely.
I mean, we've talked a lot about things that have changed in the industry, in the market. I think one thing that sadly hasn't changed a huge amount from my perspective is the number of women leading sort of savings businesses in the UK.
Yeah,
you're one of only kind of 3 that I'm aware of. What do you think as an industry we need to do more to change that?
I still think there's lots that needs to be done across the whole of financial services. We could talk about this probably all day, so it perhaps needs its own podcast.
Show.
Yeah, exactly. Yeah. But I mean, I think being more open about it, I think talking about it more openly is the first stage, right? And that is happening more. I think, even International Women's Day this year, I saw a lot of the big organisations come out. I saw men and women in those organisations talk to what it meant to them personally, as opposed to kind of corporate statements, which I think is important. But there are still organisations where that isn't the case, where people don't buy into or consider their own unconscious bias. And that's, obviously much more than just gender. But gender is clearly one element of it. And I think so many of our expectations are just set from such an early age, and that's expectations of ourselves, but also of others. And so kind of recognizing that and being conscious of that is super important to me. And I think, it's something at Chetwood, because we sort of started from scratch, because we created an organization. We had this kind of wonderful opportunity, I guess, to be able to really think about diversity as we built the organization out. Not everybody gets that kind of, blank piece of paper to work from. But even if you don't, there is so much more you can do just by having the conversation with men and women, and checking in on your own expectations and your own perceptions of people, and whether you are making those judgments on a kind of equal basis. And I think that's the crux of it, really. If people can be more open and honest about their own views, and talk more about it with others, then I think that makes a big difference. And then, I think there is a piece about role models clearly too. So, I think about my own expectations, and I think, actually when I reflect on it, it's easy to forget how many of my expectations of myself have been kind of created, if you like, in a very male-dominated environment. And so, actually getting more female role models out there and kind of allowing them to really hopefully speak to younger generations and encourage a different kind of consideration for what they can do in their own careers, I think is important too. And I know there's lots of that happening. I think Vanessa Valet does a great job of kind of promoting through the We Are the City work, people in financial services, but also in tech. There is a lot of focus in this area, but I don't really think we can do too much in this space. There is kind of always more to do, and that's got to be driven by male leaders as much as female leaders. We just need kind of the industry as a whole to get much sharper on it.
I agree. I think really interesting to hear your kind of perspective on it, and I've certainly seen some good positive signs this year, but I think there's a huge amount more still to be done. I think as a banking industry, we're improving. Yeah. But the pace of improvement is not quick enough, unfortunately.
Yeah, and I think there's still some really, kind of deeply ingrained bias, I guess, that, I think will take generations to shift, but we can only kind of talk about it and try and shift it sooner. I think the examples around children and how you handle children, and, how you react to kind of violent behavior or aggressive behavior in boys and girls, like at very young ages. You know, even some of that kind of natural bias that we grow up with, you know, that kind of, it just follows through, and it then obviously comes through into the workplace because it's part of society. And there's some really interesting stuff, I think, that, you know, is actually kind of, when you read it and kind of consider it, would be relatively easy to shift and change, but everyone just kind of needs to be sort of looking for that stuff and trying to do that all day, every day, and not just doing it once a year for International Women's Day, or, you know, it's got to sort of become much more how we operate. And, you know, we do it a lot at Chetwood in terms of even just challenging and, you know, kind of making the point, you know, if people say girls, you know, and actually they're referring to someone who is in their mid-20s or mid-30s, you know, there are a bunch of people in our, you know, across our organisation who will say that's not appropriate, right? Actually, we need to say woman, we need to say man, like you wouldn't say boy in that scenario. And some of those small things actually become quite important to getting people to consider it in a different way. And I guess it's not about making it a kind of a right or wrong, or trying to tell people off for behavior. It's just about trying to talk about it and understand why people are doing that. Because I think if you start to recognize it, and we all do it, we all have our own unconscious bias on many things. But really, when you recognize it, you can start to change it and think about it and at least be more conscious and aware of it. And that's the key, isn't it? So it's kind of small habits again, right? It's the same as the stuff we said on savings. But I think they're the important things that then actually kind of add up to a lot over time, as opposed to doing sort of really, you know, flashy big things once a year. It's much more about what we do every day.
Yeah, I agree. I think it's those things that seem quite small and sometimes maybe insignificant actually are quite important, particularly when you stack them up together. That's ultimately where you drive big change. It's not one sort of headline day a year and you know, making a big deal and then going back to you know, kind of everything how it was. I'm hoping as well I think COVID will change a lot about how we operate, and I'm hoping that also some of the flexibilities that have been allowed because they've been kind of forced will endure as well, which I think will you know, have the ability to help an awful lot.
Yeah, I agree
as well.
Yeah, I agree. I think that's a really good point, actually, in terms of almost that kind of practical outcome of COVID, which, as you say, actually just facilitates. It facilitates so much, and it is super important in terms of actually enabling women to progress and to drive their own careers, but to have a home life and everything else that they want to, right? And you're right that clearly it's one of the reasons that there is such a gender gap still. So that should be a huge advantage, having come out of COVID, which, you know, we've all seen that flexibility and that openness actually to different ways of working, which, you know, people have been talking about for a little while, but COVID really brought it all to a head, I guess, and said, no, people can work effectively from home. Not everybody wants to, but some people can and want to. And, you know, I think that's a really good point.
Yeah, it has, hasn't it? It's amazing how many jobs that couldn't be done at home when they were requested. Suddenly, within 48 hours, could be done.
Yeah, exactly. Had to be done.
Yeah. When there was no other alternative, so it was amazing how creative people got.
No, you're right.
And it wasn't that difficult in a number of cases. So I think, like you said, we could probably do a whole podcast on this. And we should do that, and we will do that. I can't let you go though without asking you one final question, which is the one I ask everyone, which is if you were Chancellor for the day, what's the one thing you'd do to make the world a better place for savers?
I mean, it's probably not much of a surprise, but my bugbear around people sitting on kind of next to no interest on their deposits. So, whether that's kind of increased communications. I know there are requirements around communicating end of term, but really what customers tell us in the research is still that they feel that savings companies are trying to trick them or to delay them in moving their money. So, whether it's communications, whether it's actually doing what we do, which is kind of enforcing more of if the customer hasn't made a choice, you send the money back. But I think there's space there to actually create a movement around people who don't make the time to invest in making the change quickly enough and then lose out on all of that interest that we've talked about, whether it's 2 months or 6 months or frankly becomes 9, 10, 12. That's the area that I think would actually have a really material impact across such a broad number of people. And is probably relatively simple to put in place. It's really just about putting more focus back on the savings companies to be clearer, to make it easier for customers to make choices or to move their money or to get their money back. And that's the thing that, I'm super passionate about.
It was interesting you said that. So one of the things you do is obviously repay the money automatically on maturity. If you haven't heard from the customer, and it'd be interesting to see whether that evolves to becoming the dominant model. If we kind of roll back 10 years, it was auto rollover unless there was nothing. Then it's become moved to easy access, so you're not kind of tied into a new term, and you're one of a sort of handful of providers that are going that way. And I wonder if that might become the dominant default option, if you like.
I hope so. I really hope so.
That may be what helps steer it in the future.
Yeah, and it's one of those really simple things that came out of the research. It came out as quite an emotive topic for customers, and actually, there was that nervousness when we went live about it is different. It is therefore a risk. Will customers understand or expect it? But really, the feedback on it has been phenomenal, and it is one of those, as you say, kind of when you take a step back, it's a basic principle, but it is the right thing to do actually, and it drives the right behaviour from customers. So I really hope so, and that's the area that I would focus on, because I actually think it would benefit so many customers, and actually make a material difference. Because as we all know, people get fixated on the 0.6% interest versus the 0.58. But actually, if you sit your account in 0.05 for 3 months, it really doesn't matter. So it's really trying to drive that behaviour into a different space that I think is important.
Yeah, no, I agree. Well, you're actually that's the first time that answer's come up. So you're.
Good.
We've had a variety of different answers there, but that's really that's a new one. But
I also have one about education, which is I just think generally kind of how do we as a society, I guess, make educating children about savings, about managing their money, about building their credit score, about all of these things. How do we kind of really get that into a different space? And I know, again, a little bit like the gender piece we talked to, there have been improvements, definitely. And there have been some big high street banks, Barclays in particular, but a bunch of others that have kind of really sort of stood by this and talked about doing financial education. But I still think there's more there to do. I still think people, and particularly when we do the research, our target market are people who, typically are putting in £30,000 plus, they're locking it away for 1 to 5 years. You would think that they are a more educated group of the UK population in this space than many. And yet some of the kind of the basics just aren't there. And so, for me, that is also one of those areas that I still think we need almost a kind of a broader kind of approach on, and there's lots of space to improve.
Yeah, definitely. I think that's something that's very close to our hearts as well. And it's something that we've been looking at from a number of angles of what role we could play there to help. I agree with you. I think when I was at school, which doesn't feel that long ago, but certainly it was. I think I had one lesson on financial sort of money management, and that was it. Everything else I learned at home or for my own reading, and that's given the importance of it, that's not appropriate, and I'm not sure a huge amount has changed since, unfortunately.
No, and I think, again, it's a little bit back to that habits piece, isn't it? Everything is out there for people who want to self-educate, but people don't get around to it, and people don't really want to, if we're honest. Even when we do the research, people, are kind of not that interested in teaching themselves the ins and outs. There's always a group that are, of course, and, and they're kind of investing and saving and doing all sorts of things because they enjoy it. But the vast majority don't. And so it's really our responsibility to kind of make it really easy for people to be educated along the way, through the journey, not needing to kind of go and set aside an hour to read an article, because they just don't do that. So yeah, it's the same principle really, isn't it? About how do you kind of build education in through school, through university, perhaps, through college. How do you kind of just make it a little bit more prominent through a number of different routes that people take to really try and get that across? Because not everybody can rely on good financial management from their family or, their kind of home life. So yeah, I think it's definitely an area that still needs work. And I guess it starts with kids, but actually, as I say, there's a lot of adults out there that still need it today. And so it's the same problem, isn't it? How do you kind of drip feed some of that information through in a way that people can consume?
Yeah, no, I completely agree. It doesn't start and end at school. I'm sure we've both seen, people who've kind of learnt the hard way.
Yeah.
Unfortunately, later on. That's probably also another podcast.
Yeah, true. Yeah.
How do we resolve that one?
Yeah.
Julia, I'm conscious I've kept you for quite some time now. It's been so insightful listening to what you've got to say and your kind of thoughts on the industry. I think we'll look forward to seeing some more of those best buy rates that you've promised in the near future. We wish all the best with Chetwood and SmartSave. Thank you very much for coming on and for your time today.
Thank you. You're very welcome. I really enjoyed it.